So the first thing we need to look is 4,000 tick chart direction. Is it going to be a trending day or a range day? So it can be a trend up or trend down, like in this one here is trending up. And then if it is a range day, like this, we have that channels, and then the price is pretty much between those two channel lines. So on the trending days, we need to respect the moving average line here. Whenever the price pulls back into that, we need to see that, and then if the moving average line is holding, then these pullbacks are not a short entry pretty much, as long as the moving average line holds. So in this case here, the moving average line didn't hold, so we saw that a little bit more pullback into the 50 moving average line. And then on the range days, then we need to respect that outside of the channel lines. When the price reaches those zones, then we need to try to enter all those areas, and we need to not to try entering a position in the middle of that range. Pretty much this is what we need to look for as a first step. We need to look at the 4,000 chart and the bigger picture, what the price is doing, and are we trending or are we ranging. And usually if you take the trades sync with the 4,000 tick chart, that will give you better risk reward ratio, and it will give you more longer profit trails. So instead of trying to short these on the smaller time frame, if you try to find long positions, you will get better risk to reward ratios. So you need to always keep in mind that 4,000 tick chart, what is it doing? Is it have a trend day up or trend down or a range day? So once we have that as a first step, then the second step is looking at the smaller time frame, which is 800 tick chart, and sometimes I use 1,000 tick chart. So we need to have an initial move. We need to have that momentum. We need to put that momentum behind us, so it is going to support our trade or make us reach our target more easy. So once we have this push, then we need to wait for a pullback, and this is most of the time it's going to look like a channel like that. And then another thing we need to look for is a moving average line. So these are the three things that we need to look. We need to look for momentum, a push, initial move, and then we need to look for a structure that the price is moving, pulling back to a moving average line. Then the third thing is we need to look for, before the entry, a signal bar. So we need to have a signal bar. The signal bar is gonna a strong bar, and usually it will cross the moving average line and break that channel or structure. And it is better if it has no wick or very little wick. So once we have all these three items here, then we can consider entering a position. So we can enter it once the bar is closed. That is important too. So you need to wait the signal bar to close like that, because it may look like this, and last 10 seconds it may just come back down and give you a big wick on the top. So once we have closed like that, then you can enter it right here once it is closed, or you can wait and do a pullback, and usually the price may pull back into the channel or into that moving average line to test before it continue up. So once we enter the trade, then your stop loss I usually do on that signal bar, bottom of that signal bar. And once you have this, then the next step is our profit target, so where we need to take our profit. So usually what I do here is I measure that first push, and then I expect the same or similar on this move here. But this depends. I mean, if you have a strong level here, like close here maybe, instead of waiting all the way here, then you may take your profit on that significant level here. So it really depends. But usually you can expect that move here after that pullback, you can expect the same size. So this is pretty much the basics for my entry setups. So I'm gonna show this on the 800 chart. So this right here is the market open, and after the market open we had that first push right here, which is on the 800 chart. We have this first push here. Right after that, our first step is here, that we have that first initial move here. Once I saw this, then what I'm looking for is a price resting and pull back onto a moving average line, and looking for some type of structure, a channel line. So this right here is what I'm looking for, this zone here after that initial move, right? And this right here is pretty much this zone here on that 4,000 tick chart. So I'm not trying to think about shorting this. Why? Because we have this move up, previously we have a stronger move up on that 4,000 tick chart, and we have an uptrend when we are not even close to the moving average line, and the moving average line is so far is holding. So I am thinking to price breaking this channel here for an up move and looking for a signal bar. So in this here, that this green bar here can be a signal bar breaking that channel here, and also the price is above that moving average line, and on that pullback can be an entry, or you can enter it after that green bar is completed, and your exit is gonna be underneath that green bar here. So once you enter the trade, then our next step is we need to measure this move and then expect the same size on the other side of that move. So this is the third leg of that move, that after that 4,000, that first push, then we have a pullback into the moving average line here. So now we have the same thing happening on 4,000 tick chart, what we see in here on 800 tick. So we have this channel forming here, and we are above that moving average line. Moving average line is holding here, so we can expect the price another run what we've seen before. So having this information, then I am now still trying to think on that 800 chart a long position, not a short position. Because if you just look at the 800 chart without looking at the 4,000 chart, just looking at it here without seeing this, you may think that, oh, maybe I need to short this move. But if you have this information here, then you may think differently, because on that 4,000 tick chart here we have that initial move here, and the price is pulling back into the moving average line. Then we are expecting a third leg of that move. Because we have this information, then I am not looking at short entries on this move here. Instead, I am trying to make this channel line here like that. Because of this information, then I am more trying to look for up move. So my rules are still the same. So I have that initial move. Actually, I have bigger initial move on this move here. Then what I need to look for is a pullback into the moving average line. and I'm looking for some type of channel form structure, which I can draw right around here. So this is my structure, and this is the bigger move. And now I am looking for my signal bar here, and I'm pretty sure you guessed it by now, where that signal bar here. So this is my signal bar right there, that crossing that channel and crossing that moving average line nicely, both of them, 50 and 25, and price nicely retest, give us a second chance to enter if you miss the entry here. And again, for taking the profit, you can expect this much move here. You can trail your stop from the moving average line or from the 50 moving average line, or you can just do the measure move here and then expect this much on this side here. So at this point, once we have this bar printed under the 21 moving average on 4,000, usually I do a channel line and wait the price test the moving average line and look for a rejection or failure from that moving average line, and this area can be a short entry. So in this case here, we had the price came back up and retest that moving average line 5 times, and on this bar here, after above that moving average line, we had this red bar here close under that moving average line, and right after that signal bar, the price actually did 2 times more test above that moving average line, but it failed on both of them. So you could have either entered here and then your stop is gonna be above that signal bar here, maybe right there, or you could have waited, and once you see this level broken, then you could have entered on that pullback or when this bar is close here. So it can be a 2 entry, either on the first one or the second one, and you can expect that first move on that third move here. So after seeing the 4,000 tick chart holding 50 moving average here, and the bar is closed above the 21 moving average here, once we see this is happening here, then we can take this info into the 800 tick chart here. Then we can do the same thing on 800, can create our channel line here. Then we can look for a signal bar crossing the moving average line and nice full bar, which is this one here. After the price is closed, then can be an entry, or it can be an entry on that pullback into the moving average line, and your stop is gonna be underneath that signal bar, which this move is gonna give a lot bigger move here because the legs are getting bigger here. And if you consider this before entering in your smaller time frame, then it will help you a lot, and it will prevent you to enter on a wrong direction or not necessary trades. This is pretty much the summary of my trading entry setup, and I hope this helps with your entries.